Hello ladies and gentlemen, my name is Bookkeeper Fazan. In today's short video lesson, I'm going to teach you about IAS-16 Part 2, Impairment of an Asset. In previous lesson, I taught you IAS-16 Part 1, which is depreciation and revaluation of an asset at market price. So today lesson, we are going to talk about impairment of an asset. First of all, we should understand the concept. We should understand the concept of impairment. What is impairment? Impairment is like decreasing the value of an asset. For example, there are two ways we can decrease. First way is depreciation and amortization. The second way is impairment, right? These two things mean depreciate, means two things mean decreasing of the value of an asset. Now impairment is not natural, it can be by accident. For example, I purchased a bicycle a week ago for rupees 60,000. Now I've got my bike has got an accident. So now I went to the market, and the value which the market is offering me right now is 40,000. So that's called impairment, right? Reduction by accident, by advancement of technology. For example, mobile phone, the latest you bought a week ago, but now the latest model of the same mobile came, right, of the same series. But so that's called impairment. There are lots of ways to impair that, right? Let's see. So to impair an asset, follow these steps. Number one, identify the asset, determine which asset needs to be impaired. The second step is check for impairment indicators. These are called impairment indicators. Significant decrease in market value, damage or obsolescence, which I already discussed the case of the motorbike with you. Damage or obsolescence, discontinuation of use, legal or regulatory changes, right? These are the impairment indicators. Now step number 3 is determine the recoverable amount. Calculate the assets fair value and value in use, present value, future value. So we take the fair value, right? Step 4 is compare values. If the asset carrying value means book value. If the asset's book value exceeds the recoverable amount, right, exceeds the market price, exceeds the fair value, so impair it, right? Okay, record the impairment loss. Debit, impairment loss debit. What is the entry? You can also credit the asset, right? Direct way, like impairment loss debit. It's like depreciation. Like impairment, depreciation is natural, right? You have to apply it every month or every year. You have to apply it. Depreciation, right? Depreciation expense debit, accumulated depreciation credit. Like the same thing, it's decreasing the value of an asset. So impairment loss debit, which is in just like depreciation expense, like impairment loss debit and accumulated impairment loss, just like accumulated depreciation. So it's a contra asset for us. So we right. So you can also write the entry like impairment loss debit, fixed asset credit, the asset which you are going to which is impaired, right? So you can record the no problem in it. But some people prefer to record accumulated depreciation, so it's good. So the entry is impairment loss debit, accumulated impairment loss credit, right? Adjust the asset. Okay, so let's assume that we have a company XYZ with a machine that initially cost $100,000. After 2 years, the machine's carrying value is 18,000. I mean, the book value is going to be 18,000. First, I need to just make the entries. Machine debit, bank credit. We purchase the machine. Depreciation expense for the 2 years, and accumulated depreciation we recorded. Right now, the book value is, what will be the book value of an asset? Book value becomes 1 lakh minus 20,000. So it will be the book value of it. Okay, but the fair value, you also can say market value is, what is the market value? Market value is, for example, let assume that the market value is now 50,000. Understand? The market value is 50,000. So it is less than the book value. So let's go to the step. Let's go to the impairment test. Right? Compare step 4. Compare the values. We have compare it. So the book value is greater than the market value. Whenever the book value means carrying amount is greater than the fair value or market value, so we have to record the impairment loss, because book value is 80,000, market value is less than. As I told you, there are lots of many cases. there can be many cases like impairment indicators like significant decrease in market value, damage, discontinuation of use, legal or regulatory changes, right? So this can be the book value, market value, right? So what we can do is we have to record the impairment loss. Impairment loss, in order to record the impairment loss, what is the formula of impairment loss? It is very easy of to record the impairment loss. As you know, the book value minus the market value. So it is our impairment loss. Ladies and gentlemen, understand, this is our impairment loss. Let me highlight it. So this is our impairment loss. So we have just identified our impairment loss. Now, as you know, the now let's calculate, make the adjustment, right? So what we can do, let's now just we need to can say impairment loss, right? So new book value is, ladies and gentlemen, we need to calculate the new book value. So market value is our 15,000. Now machine is gonna be calculation, right? Let me write the calculation. So ladies and gentlemen, machine is gonna be 50,000. Take this. Market value is now 50,000. Less. Now what will we do? Less accumulated depreciation, which is 20,000. Accumulated depreciation, which is 20,000. So become 50,000 minus 20,000 impairment loss. Understand how it's gonna be accumulated impairment loss. That's how we record accumulative impairment loss. Let me, this is called accumulated impairment loss. Let me write it. What I did is I just minus the accumulated because the total depreciation, we know our total depreciation with the 20,000, right? After that we didn't calculate the depreciation, we did just calculate the impairment loss. So that's accumulated impairment loss of 30,000. That's the same, right, ladies and gentlemen? This value and this value should be same. Okay, so what we need to do, ladies and gentlemen, we need to pass the entry of the, what do you say, now we just need to pass the entry. Let's pass the entry. The entry is, what is the entry? Yes, impairment loss debit, accumulated impairment loss, accumulated impairment loss. You can also credit the fixed asset because you know of 30,000 you can, because it's in decreasing, right? It becomes the book value was 80,000, now it is decreasing. You already recorded. For example, if here you also need to record the machine, right? If you want to record the here, so machine credit 20,000, machine credit 30,000, 50,000, right? So already it will, the machine cost is 50,000 again. Understand? So instead of crediting machine, we are just crediting the normal case, which is accumulated impairment loss, just like depreciation expense. So 30,000, 30,000 machine fair value, 1% market value. So accumulated depreciation 20,000, because we need to calculate the previous, we need to take the previous depreciation. So that's how, that's the case of now machine in the balance sheet. Machine, what will do machine? Machine cost will be 50,000 automatically, because 30,000 impairment loss, 20,000 depreciation, already become 80,000. 80,000 minus 30,000 depreciated by 50, now the 50,000. You have to show machine cost 50,000 on the balance sheet. Original cost was 1 lakh. Now the machine cost is, after 2 years, the machine cost is. Understand? I hope you understood the concept of impairment of an asset. You can impair fixed asset, you can impair intangible assets, even you can impair the current assets. Understand? So I hope you've understood. I will meet you in the next video. Take care and love.